We're going to talk about ministers' taxes today. And we do have some who are online today. And if they have questions, then they'll be typing those questions in. And Beth will give me those questions and we'll make it a part of our day today. We're going to be using several materials here. And you're going to, today I have a plan here that we've got the financial issues book, that's this black one. We've got the minister tax guide, that's the white one. You've got a packet. We're going to refer to some things in your packet, and we're going to shuffle papers today, and that'll keep everybody awake. So because we've got some things that we're going to kind of pull out of each of these resources. Now, the financial issues book, there may be a whole lot of stuff in the financial issues book that you don't care about, so you can give that to your treasurer, financial secretary. If you just really don't want it, you can leave it here, and I'll take it to the next conference. Either way, but you're welcome to it. You're welcome to have it. We've got plenty. So that's what we're going to do today, and we're going to use several of these resources. So as we look at it, very first thing, and you don't need to turn there, but on the very back of your black book, very back page, you've got a resource page. And what I wanted to mention here is that you've got all my contact information there. You've got phone and email and my cell phone number and all the ways to contact me. I have been semi-retired working part-time for going on 6 years. And I can't believe that, but I have. And so I'm only here in the office 2, 3, 4 days a month. And the rest of the time I'm working from home. So you've got all the ways to contact me there. And then of course this month I'll be doing these conferences in Birmingham and Huntsville and Dothan and Mobile. But you've got ways to contact me, and I'm usually able to get back to you pretty quickly. Also, I want you to take out of your packet, that packet that you have, there's a registration card. And don't fill it all out, just put your name and your church. And then if you need something from me, then you can just write it in the space on that card. And if you need something from me, give me a phone number or email or some way you'd like to be contacted. The other side of that card, this is a Guidestone card. And Guidestone is our provider for retirement and insurance and property and casualty insurance, and they're just doing some wonderful work in those areas. And they're actually doing some great work in medical insurance. I used to, 10 years ago, 15 years ago, I never mentioned them as far as medical insurance because Blue Cross Blue Shield of Alabama always beat them, always. And there was no exception. But now Blue Cross has gone up really fast. Guidestone goes up too, but not quite as fast. And so now very, very often Guidestone will be less expensive than Blue Cross. And come on in. Doing all right today?
Yes, sir.
We're just getting started, and I was going to say there's a registration card there. Just fill out your name and your church, and then if you need something from me, a phone number or email or anything like that. So Guidestone is doing some great work. Now, health insurance is, even with Guidestones often being cheaper, it's still terribly expensive. But oftentimes there is a better price. Also, in the property and casualty realm, they often are competitive and lower priced than what you might find elsewhere. And they will make sure that you have all the coverages that you need. We as churches, we do some things different. We have activities that are not on our campus. We have children. That's a big deal. Insurance-wise, that's a huge deal. We have the vehicles, and even if you don't, as a church, own vehicles, you need what's called non-owned vehicle coverage because your pastor, if your pastor's out driving around in the course of business and involved in an accident, and it's a major accident, then they might look to the church to and let's say he's got certain limits on his liability insurance, and it's major, they might come back to the church for additional coverage on that. And so things that we've got to think about that are not common to most businesses. So they're doing some really good work. If you need some information from them, then you can fill that out on the back of that card, and we will get that information to GuideStuff. All right, so just a word about resources. Now, there's some things that I'm going to talk about today that are not really in your book. I'm just going to make some comments. It's not anything really that you need written or take notes. But I've been doing some reading, and I found it really interesting. There's an article, and you and I have got to be careful about what we read, especially in terms of ministers and finances or tax or whatever. There was an article that said that retirement love offering is not taxable when your pastor retires. And it was based on a private letter ruling going back to 1955. And since that time, the IRS has clarified in section 102, I think it is, that virtually any income that comes from business or church to employee is taxable. And there's only certain exceptions that the IRS enumerates that or outlines about what those exceptions are. And so that one is not valid anymore. There's articles promoting methods to avoid taxes are oftentimes overhyped, and then mainly one of the main ones is they advocate you being classified as being self-employed. And you are self-employed for your Social Security, but you're not self-employed for federal. And I'm talking about today, what we're going to be talking about, we're going to be talking about pastor of a church, associate pastor, a minister serving a church. If there are some ministers who truly are self-employed, like an evangelist, like somebody who is an author, writing Christian books, things like that. But today we're going to be talking about ministers who serve in a church as pastor, associate pastor, other minister on staff, things like that. And so you are an employee, and you have what we call a dual tax status. We'll talk about that in a little bit. And so the advantageousness of being truly self-employed, if we were, but we're not, would be that we could write off business expenses. And now we can't. And the IRS has clarified that we cannot, as being an employee, we cannot write off business expenses on our taxes anymore. The home office is still being pushed, and they clarified that. The IRS has clarified that anyone who is receiving a W-2 may not claim home office. And so be very, very careful. And so know some really good authors in this realm. And Richard Hammer is my favorite. In fact, this book that you have, the tax guide, says prepared by Richard Hammer. And he is the nation's leading authority on ministers and tax. In addition to this, he writes a big 700 and something page clergy and church tax guide that is kind of the granddaddy book on any question that you might ever have about ministers and taxes. And some others that he also has church law and tax. I think I need to change that. I believe that's right. It used to be Church Law Today, but I think it's churchlawandtax.com now. And so very, very, very good source. His works are published by Christianity Today, so it's a good source. Guidestone is a great source, and they have a lot of materials that are helpful to us. We will look at parts of the compensation planning guide from Guidestone, and that's really the best resource they put out about ministers and compensation. And if you do it according to that booklet, you're going to help save on taxes. Frank and Elaine Somerville, they are two nationally known people in this space also. Frank is an attorney and CPA, and he specializes in nonprofits, but especially churches. Elaine, his wife, is a CPA. She's written a book on church compensation, minister compensation. So very, very good people in this space. ECFA, Evangelical Council on Financial Accountability. That is a really good organization. And some of these people I've mentioned in that resource page that I mentioned just a moment ago that's in the back of your book. Some of these people that I admire so much. Now there's some others. Michael Batts is nationally known in this space. I've seen him at a lot of conferences. I haven't known him to write, I've seen him write articles, but I've not known him to write books. But know good authors, be careful of authors that might not be good and might say some things that are no longer applicable, and you can't do that anymore. All right, in your packet, the W-4 form, there's a sheet called 2025 Minister Estimate of Taxes. And we're going to pull that out and look at it. The W-4 does not work well for ministers. You have a housing allowance that reduces your federal tax. You have other things that reduce your federal tax. And let's say that you made $50,000 and you want $20,000 as a housing allowance and you're married. Well, okay, the standard deduction for a married couple for 25 is $30,000. So you take $50,000 minus $20,000 housing allowance minus $30,000 standard deduction. You're not going to pay a dime in federal tax at that income level. So you're going to not pay much in federal tax, but you will pay a lot in SE tax, self-employment tax. That's your Social Security and Medicare. So the W-4 form does not work well. If we took my example and applied it to the way that the W-4 works, then that person would not have any withholding at all because it would be showing that they're not going to owe any tax. But we've got the self-employment tax. So the sheet that I developed is on one page, and it is this sheet, 2025 Minister Estimate of Taxes. And is anybody in a parsonage? Okay, there's another sheet that is for if you're in a parsonage, and it's in your packet too. But anyway, now this sheet, I wanted to fit it on one page. That was my goal. And I accomplished that goal. But I want to tell you that because of that, it's wrong. It's wrong. And I want to tell you what's wrong with it so that you'll know. There's two things wrong with it. But it is a reasonable estimate. So what you're going to do in calculating this is, first of all, you're going to take your taxable income, not including housing. Then you're going to add in any kind of other income like bonuses, and maybe you had funerals and weddings and speaking engagements. Maybe you have a second job. Maybe your spouse works. You're going to add in to total the family income. Is what you're going to do, family taxable income. Then you're going to subtract the standard deduction. And for a married couple, that's $30,000 this year. For a single, it's half that amount. And so I take my example of $50,000. Let's change it. Let's make it 80. and $80,000, and we want a $20,000 housing allowance. And so 80 minus 20 is 60. 60 is the taxable part of that income. Then 60 minus 30, standard deduction for a married couple, leaves 30. And then you're going to apply the tax rate. And there's a 10% tax rate first, then there's a 12% tax rate second, and I just used 12. I just figured 10 and 12 are not very far apart, and so we'll multiply that by 12. So I took $80,000 minus 30 minus 20, minus 20 minus 30, and so that left me 30. 30 times 12 is 3,600. Okay, so that's the federal tax owed, and we're just pretending that's all the income. If you had other income coming into the household, then you would have added that into the taxable income. So in this case, 3,600 is the federal tax. Then you're going to, if you have children under age 17, you're going to have a child tax credit, and that child tax credit would be $2,000. So if we did, let's say we've got one child under 17. So we subtract 2,000 from that 3,600, so that makes 1,600 is the federal tax. But we're going to pay the SE tax, self-employment tax, on the full 80,000, on the whole 80,000. Now, so your sheet is incorrect because I skipped on to the 12% tax bracket. It's going to make your estimate just a little bit high, It can't make it more than about $400 a year high. And for a typical person, it's going to be $200-300 high. Then I've got down below that the estimate for your SE tax, and it is an exact calculation. You multiply it by 0.9235, which makes it, it's not based on 100% of your income, but 92.35% of your income. Then you multiply that by 0.153, so it's 15.3% is the tax rate. So, and I'm just going to use, just for round numbers, 15% of $80,000 would be $12,000. So in our example, this person owes $12,000 plus $1,600, so that's $13,600. And so then you take that, and there's two ways that you can do it. You can divide it by 4 and send that in as 4 quarterly estimated tax payments. Or your church can do withholding for you, and they can only withhold federal income tax and state income tax. They cannot withhold FICA on you. They cannot withhold any kind of Social Security tax on you as an ordained minister. And so you take that 13,600 divided by the number of paychecks you're going to have in the year, and that would be your federal withholding for that year. And that's the way that you can estimate. So I mentioned there's 2 problems with this form. One problem is I skipped the 10% tax rate. Now, I wanted to fit it on one piece of paper. That was my number one goal. And if the IRS had done this form, it would have been at least 10, 12 pages, and there would probably be 10 or 12 calculations on each page, you know. But I wanted to fit it on one page, so that's why I skipped the 10% bracket. Then the other thing, and that's the second mistake, is I did not apply the 22% tax bracket. So if your family income, now the 22, in fact, I've got it at the end. The 22% tax bracket starts at about $120,000 thereabouts because of the standard deduction plus the 10 and the 10% tax bracket and the 12% tax bracket. It gets you up about that far before you have 22. And then housing allowance gets it up a little farther than that. So if you've got $150,000, I'm talking about family income, then you might need to apply, or greater, you might need to apply the 22% tax bracket for amounts over that. And you're just gonna have to take a look at it, kind of guesstimate it as to whether you need to do the 22% or not. But that's the two mistakes on the form. I thought most of us will be under that 22% bracket. And if we do go into the 22% bracket, we're not going to be in it very much. You don't, when you get in a 22% tax bracket, you don't pay 22% on everything. Did you know that? I had somebody in one of the churches I served refuse to raise because it's going to put them in another tax bracket. And that's not really good thinking, because the 22% applies only to the amount up over a certain level. And the rest of it is at 0%, the standard deduction, at 10%, and at 12%, So don't fear getting into another tax bracket. It'd be nice to not, but it's not that big of a deal unless you're making $250,000 a year, and then it becomes your taxes become a big deal. All right, so W-4 form does not work well for you, but this minister estimate of taxes will give you a good estimate for your 2025 taxes that you can do either as quarterly payments or as withholding, only withhold it as federal income tax. All right, everybody okay? All right, big tax change that happened in 2018 is that Congress eliminated the unreimbursed business expenses on your itemized deductions. That's Schedule A. So you can no longer deduct unreimbursed business expenses. Now, when we think about it, that's the way we used to do it. And still, churches are still doing it that way. And when I went to Heritage at first, and First Baptist Fultondale before that, they said, here's X number of dollars, you divide it up any way you want to. Does that sound familiar? And they said, divide it up any way you want to. So what I did is I took this income and I set aside some for retirement and some for health insurance, and I set aside some for business expenses. And then I used that money for business expenses. And back then you could do that, but no longer. And Congress in 2018, they eliminated that. A person who is an employee cannot write off a single dime of business expenses. And so you need to have an accountable reimbursement plan to reimburse you for your business expenses.
If you create a LLC for yourself and run your income outside church, like speaking engagements and things like that, consulting things, can you run your business expenses from that portion of the income?
Yes,
Okay.
we're going to talk about that in a minute.
Okay.
And that's a great question. But you don't have to do an LLC to do it.
No, you don't.
Yeah, you can. See, you've got a multi-factor tax status. You have a dual tax status. You're an employee for the church and you're self-employed for your Social Security. Then for your weddings and funerals and other speaking engagements and other things that you might do, that is self-employment income. And for the expenses related to that, you can write off those expenses. Yeah. I did a funeral one time. It was a friend of mine, and we had moved, and I drove 400 miles that day. And so yes, you can write off those expenses related to doing that funeral. But you can't write off any expenses related to your church, related to your church income. It's a great question. Thank you. All right, also, another thing that changed in 2018 is that moving expenses are now taxable. If your church pays for your move, then that's taxable and that goes on your W-2. And that's one that I wish they would change, but we'll see. They do move the military for free, tax-free. So I'm glad they at least do that. But things have changed. Now, speaking of changes, there's very little change for 2024 and 2025. Very little change. But for 25, getting ready for 26, we're going to have some bigger changes. And it might be real big, it might be not so big. We'll just see. Our current tax system that we are enjoying will expire at the end of 2025. And so, what they brought in, now remember back to what they brought in 2018. We've got doubled standard deduction from the way it used to be. We don't have those personal exemptions anymore, remember that? Some other things that they have actually simplified. So one of the goals of Congress for decades, has been to simplify the income tax, and they did so for about 90+% of American taxpayers. It's a real simple. In fact, one of the goals was to fit it on a postcard. And that goal, you can see how far back that goal goes, because back then I remember being in college and you handed out your Social Security number just like, it doesn't matter. That was your college ID, that was the, ID to do this or that or anything, and everybody knew your Social Security number. Well, we don't, and so if back then, if they had had an ability to fit your taxes on a postcard, we would have done it, because we didn't care. But now, of course, it's a whole different day. So we wouldn't literally put it on a postcard. But if you'll take the Form 1040 and print it out, it would fit on a big postcard, front and back. And they said they've accomplished that goal. I hope that as they change it, I hope they keep that simplicity. I hope that they do. And while we're at it, I wanted to tell you, here's my guess. And today we have a money back guarantee. And so what I say is guaranteed, and you can get your money back if it doesn't turn out to be correct. And of course, what did you pay for today? Nothing. So that's about what it's worth. So anyway, I believe, and this is just my guess, I believe that they will give American taxpayers, middle class, a small tax decrease, just so that they can say that they did it. And I hope they keep the simplicity that we have now, at least for 90+% of all Americans, and hope that they do that. But I think the main thing they're going to work on is going to be a corporate tax rate of 15%, but it's going to be with a catch. Those corporations have got to bring their work, their factories, their manufacturing here to the U.S. And if they don't do that, they don't get the 15% rate. So I think that's going to be kind of the main thing they're going to work on, and they'll give us a small tax break just to say that they did it. And that's my guess, and worth what you paid for it. So we will have changes for 26. Now the question is, will those changes, will they do it soon? And those changes may be effective for 25. Will they do it later in the year and the changes are not effective until 26? If we had if we'd had a divided Congress, I would have said it's going to happen December 29th, and it won't happen until 2026. But we'll see. I have no idea. We'll just see. But there will be changes coming. All right. Let's talk about changes. There are a couple of countries that the government does your taxes for you and sends it to you and says, here's your tax bill, and and you don't even have to fill it out. They've already done it for you. Well, really and truly, this simple system, that could work for about 90% of Americans, but we're not there yet. But I just thought that was fascinating. All right, now, let's go to this book. And we're going to start on page 12. First part of this book tells about some changes. Excuse me. And there's not a lot of changes. One thing, if you're 62, 63, 64, those ages, there's a special catch-up provision on your retirement, that you could put more money into retirement than even, there's already a standard kind of amount that you can put into your retirement. There's a catch-up provision for if you're over age 50, and that's been in effect for a good while. But now there's also an extra special catch-up provision if you're 62, 63, 64. So that's kind of affecting us. Now there's some other changes that don't really affect too many of us, but you can read that section on tax changes in the first part of the book. We're going to go to page 12, and we're going to highlight a few key things about this book. We're not going to go through everything. We're not going to go through tax forms, but what we're trying to do today is to go through the principles of it all and learn how that I might be able to save money on my taxes. And if I can't save money, I can at least know kind of what my taxes are going to be, so I don't have any shocks coming to me or anything like that. Now, on your desk, you've got a highlighter. And I suggest that you highlight some of these things that I'm going to point out to you in the book. So on page 12 tells us, and this is the top left column, the key point, you as a minister, an ordained minister, you have a dual tax status. A dual tax status. You are an employee of the church for federal purposes. You are self-employed for your Social Security purposes. That one sentence determines about 90% of your tax situation. And so as a minister, there's some things that means. It means that you're doing those, you are ordained or licensed, and you perform the functions of ministry. You lead worship, you lead baptism and Lord's Supper, you are a leader of the church, considered to be a religious leader, you lead the organization, and so forth. And that makes you a minister for tax purposes. And then by doing so, you have the opportunity to have a housing allowance, which is going to help you on your taxes. And you don't have to do withholding. We just did that you take this estimate, figure out what you're going to owe for this year, and it could either be paid that you do it in 4 payments each quarter, one each quarter, or that your church withholds it as federal income tax withholding. And either one of those, so you're not required to do withholding. Now, if we've got a regular employee, like a ministry assistant at the church, that church is required to do withholding on that person. And but as an ordained minister, withholding is not required, but and you do have the housing allowance. Now, page 36, the right middle. I know this skips ahead, but I wanted to say it while we're talking about this. There are many ministers who want to claim self-employment tax status, and this is still going on. They want to be self-employed, and a perceived advantage of this is that they can deduct their business expenses as they do the Schedule C. And however, if that minister is audited, the IRS is going to change it, and say they're the pastor of the church. They're going to change, the IRS is going to change the tax status to employee, and that change will result in additional taxes and penalties. And you can highlight that section right there on page 36. That's a real key point for what we're talking about today. All right, let's go back to page 12. There are ministers who are truly self-employed, like I mentioned those, and then you often have some self-employment income, and I mentioned that. And so you can use Schedule C for your truly self-employment income. And that would be things like weddings, funerals, speaking engagements, things like that. And you can write off the business expenses that relate to that. And that's on page 12, the lower right example, that you can see that in your book. Page 13, the top left, ministers are better off as an employee. And if we were truly self-employed, we would have that one advantage that we could write off business expenses, but we'd have a lot of disadvantages. And so here's the disadvantages to not being an employee. Your benefits, they can't give you benefits if you're not an employee. Second, the risk of audit is lower if you're an employee. Third, it avoids the risk of being reclassified, and the IRS changes your tax status, facing additional taxes and penalties. Talking about penalties, I mentioned that you can either have withholding done or you can send in quarterly payments. I had a minister one time, we were talking about his taxes, and I asked something about quarterly payments, and he said, "Oh, I don't do that. I just send it in at tax time. Just one check and write that check." And I said, "Well, you're going to get penalized for not paying. You've got to pay all throughout the year and every quarter, or if you have your church withhold, that does it. It's being paying in all throughout the year, or you're going to have a tax penalty." All right, so ministers are better off as employees. Page 13, the right, should we opt out of Social Security? And our advice, Guidestone's advice, has been to not opt out of Social Security. Now, there are ministers who do, but our advice is not to. You have to do this within 2 years of being ordained and starting your ministry service. You can only do it for that you conscientiously, and say that 3 times fast, conscientiously object to receiving government insurance. It's not that you object to paying it. It's not that you feel like it's a bad system. It's that you object to receiving it. And your objection is based on religious reasons. And then you fill out this form. The IRS has got to approve that form, and then you can opt out of Social Security. And the way he says it here is few ministers qualify to do that. But in fact, I read an article not too long ago that they had done a study, and this was not Guidestone. I was surprised that it wasn't Guidestone, because Guidestone feels very, very strongly about this. And so I was surprised it wasn't Guidestone, but it wasn't. And when they wrote about opting out of Social Security, they wrote an article that was fairly neutral. That, you can if you meet these criteria, don't do it if you don't. And they were pretty even-handed on that. But they said that they had done a study and found that ministers who stayed in Social Security, and they compared ministers who stayed in to those who opted out. And those who stayed in Social Security, when they got to retirement, they were better off. And we have this goal, if we thought about opting out. And by the way, I wrote a paper about why we all should opt out when I was in seminary. My seminary professor didn't really like my paper, and he told me all the reasons, not to. And then when it came time for it, I didn't. But anyway, we have these ideas of, I can have my life insurance, I can have my retirement planning, I can have my life insurance and disability insurance and all those things, and I can do better than the Social Security system. You know, we've got that idea, but what happens is life happens, and a lot of ministers don't make a whole lot, and some of those things get put on the back burner, and so then when it comes to retirement time, on average, they discovered that those ministers don't do as well as those who stayed in Social Security. So, can we opt out? You can, but under limited, very, very limited circumstances. And if it's been more than 2 years, you don't even have that option anymore. You can. Okay, page 14. How do ministers pay their taxes? And they can do voluntary withholding. We just talked about that. Fix an estimate of what you want to have withheld. Now, see, you're going to be withholding a whole lot of extra federal income tax. So you're going to have to tell your church, and you do so on a W-4, you tell them about all the extra federal withholding you want to do. The other way is you pay those quarterly estimated payments, and you do so on a form 1040 ES. ES stands for estimates. And then there's deadlines. If you're going to do it quarterly, here are the deadlines in your book. And notice that they're a little weird. They're not exactly quarter. You know, April 15th is, but then June 15th. And September 15th. So those are, and then January 15th of the following year, you do that last quarter. All right. So we look at what is taxable. What is taxable income? And you'll see this on page 17 on the left column. We're going to talk about that in a minute as we look at the other book. And we're going to talk about a few things that he doesn't mention in this guide, but we'll mention that. So some additional notes. Remember to track your itemized deductions. Now, most of us in this room cannot itemize our deductions for federal. But do track those deductions, keep a record of it, and be ready because you can deduct it on Alabama income tax. And you'll be able to, Alabama, I wish that was another thing that if they put me in charge of taxes, that's the other thing I do is make Alabama coincide with what federal is doing. And you could make it where it coincided and still have the same revenue coming in. You could figure out where it would do that. But do keep up with all of your itemized deductions because you will itemize those for Alabama tax. Also, you can, for Alabama, you can still report employee unreimbursed business expense. Alabama didn't change. And then that employee unreimbursed business expense, you can subtract that as you calculate the self-employment tax. So you can do those two things with it. All right? Now, here's the tax question. Which is better, a credit or a deduction? Everybody agree? Credit? Yeah, credit. Why is that so? Yeah, so a deduction is a deduction off of my income. So let's say that I made, $80,000. We'll go back to that example. Made $80,000, and I've got a $2,000 deduction. So that lowers my income to $78,000, and 12% of that $2,000 is $240. It saved me $240 on my taxes. But if I'm in that standard deduction section, it doesn't save me anything on my taxes. But a credit is an amount actually off of what you owe. So as we did this example, we had an $80,000 income, had $20,000 housing allowance, $30,000 standard deduction, and then they had a child under age 17, and they figured their taxes, federal in that case, were $3,600, and you actually subtract $2,000 from the tax bill. That's what a credit does. So you always want to look at credits. And there are some really good credits to look at. First of all, do you have a child? That's number one. If you have that child, do you have dependent care? And that could be a tax credit. Do you have education credits? If you've got a child like in college and stuff like that. Do you have credits because your income is a little lower and you're saving for retirement? And there's a form that 8880. That's a form. You might want to write that in your book. Check on form 8880. If you make a certain income, that phases out. But you might have a credit for putting money away for your retirement savings. And there's energy credits. Energy credits could be that you did some things to your house to save on energy. It could be, energy credits could be that you bought an electric vehicle, things of that nature. A friend of mine bought the Chevy, which one is that, Bolt? Whichever one's electric. Those have not sold real well, and they got a super deal on it, plus the, I think, $7,500 tax credit. So look for credits. Check out credits and see if there's credits that apply to you, because that's going to be your biggest tax savings of about anything. Will be a credit. All right. Any questions about that? All right. So the greatest tax saving, which one out of these, just in terms of dollars? Now I know a lot of it's your circumstances and what you can do and things like that, but just in terms of dollars and cents, which one of these four things would give you the greatest tax savings? Can we put it kind of in an order of 1, 2, 3, 4? So you've got housing allowance, retirement savings, deductions, and credits. Which would save you the most on your taxes? So what would be number one? A credit. Not yet, not yet. Number one would be a credit. Actual subtraction from what I owe. Number two, what do you think number two would be? Retirement savings. Because when you put money into retirement, you're not paying any tax on that whatsoever. None. I don't pay federal income tax on it. I don't pay state income tax on it. I don't pay my Social Security taxes on it. Now, other employees, they do pay that FICA on it. But we as ministers, we don't. They didn't devise a way for us as ministers in this weird dual tax status of being an employee for federal and self-employed for Social Security. They didn't devise a way for us to do that. So actually number two in this list would be retirement savings. What would be number three?
Housing loans.
Probably, yeah, I think housing loans. And then number four would be a deduction. And housing allowance and deduction could be somewhat similar to it. So people think that the housing allowance is, boy, that's the best tax advantage since sliced bread. I mean, that's the greatest tax advantage ever. But it's really not. And we're going to see it's not really what it's made out to be. And it is, you should take advantage of it, take advantage of everything you can, but we're going to see that it's not quite as advantageous as you'd think.
Isn't there a limit on your retirement savings, what you can put
Yes.
aside?
Yes.
Okay, per year, right?
Uh-huh.
Is it 6,000
Yeah.
per person per year or something like that?
Well, now that's for an IRA. Let's look at page 68, I think it is. This book.
Okay.
Page 68. That's a great question. 67. And so I've listed them for you. Your limit on how much you can put into retirement this year is 23.5. I'm in this chart here. Oh, and by the way, going up to the top of that chart, fill in the blank 70 cents a mile. is the business mileage rate for 2025. It's a good time to go to this chart because, and then the mileage rate for medical is 21 cents still. But 23.5 is what you can put into your retirement. Or if you're bivocational and you only make 20 would be your maximum that you could put into your retirement. Then there's an additional over 50 catch-up of $7,500. So if you're over 50, you could actually put $30,000 into your retirement. And if you're both working, you could put in twice. Each of you could put in that amount. If you can do that, if you can work that into your budget, that would be great. And I know people, they get to the empty nest stage and they're thinking, boy, the kids are out of the nest, I pay for college and all that. I've got to catch up on my retirement. And so that's the amount that you can put in. Now to an IRA, you can put in $7,000 and the catch-up provision is an additional $1,000. So it would make it total of $8,000. And so you can put more money into your church retirement plan than you can put into an IRA. That's a great question. All right?
So we can actually put, we just been putting like 6,000. We could put 8,000
Into an IRA?
into IRA.
Yeah, but are y'all putting in a lot into Guidestone? You'd want to.
Okay.
Yeah, I'm going to talk about that in a minute. But you really want to, and my suggestion, and I'm not a financial planner, I don't work for Guidestone, but I would suggest putting that full amount into Guidestone.
The full
And I'll
8,000.
For you'll receive it as housing one day. And we'll talk about that in a minute. Yes, Dan.
Yeah, you had mentioned on your Alabama taxes that you maintain deductions and to keep up with those. Can you count if you pay health insurance that is not pre-tax, can you deduct that off of your Alabama state income tax as a medical expense?
Yes. It's going to be Schedule A, itemized deductions.
Okay.
You've got medical, you've got your property taxes, you've got contributions, things of that nature. So
Okay.
yeah, you
Okay.
can deduct it on Alabama.
Good.
The thing about federal is most of us don't have enough to itemize.
Right.
Yeah. All right. Okay.
Lee, you've got two questions on
Oh, good. Thanks, Ben.
It says our church lists the housing allowance on W-2 using TurboTax to report housing allowance on W-2 section and on the subsequent section asking amount of housing allowance expenses.
Okay, so on the W-2, and we're going to talk about W-2 in just a moment, but on the W-2, the housing allowance should be listed in box 14. If it is on the W-2, it's not required to be. But if it is going to be on there, it's going to be in box 14, labeled housing allowance. And then when you mentioned TurboTax. When you do TurboTax, you're going to fill out the W-2 into TurboTax. Then you scroll on down past the W-2, and it's going to say, is this income from being a minister? And you're going to say yes, and that brings down kind of another couple of boxes. And you're going to fill out what was your housing allowance and how much did you spend. And so you're going to compare those two. If you didn't spend it all, you're going to have to report the difference as taxable. But if you spent it all and it was all justified, then it would not be taxable for federal purposes. And that's kind of the way that TurboTax works to do that. And I've used one more, can't remember the name of it. One more tax program, and it worked kind of similar to the way that TurboTax worked. So I hope for our person, I hope that answers. If it doesn't, type in part B to that question. And then there was another one.
Yeah. It says if a minister has started receiving Social Security retirement, is that taxable income?
Social Security is not taxable if your total income is low. Then there's a point at which you pay taxes on half. You only pay federal income tax on your Social Security. And I don't think you pay state income tax on your Social Security. I don't think so. But there's a point at which you might pay taxes, federal income tax, on half of your Social Security payment. And then if you make more money, you'll pay taxes on 85% of the Social Security you receive. So it depends on how much the total income is coming into the household at that time. Yeah. And actually, yeah. But if you use a tax software and you're putting those numbers in that you received, then the software will do that for you and will show you, was any of it taxable or not. Okay, good questions. All right, so basically how to save on our taxes, we're going to look at several different things. Number one way to save on your taxes is to have an accountable plan for your business expenses. Have the church reimburse you for business expenses. And they need to have that in their budget. We're going to talk about that one in a minute. Also, with that accountable reimbursement plan, for IRS purposes, this actually goes in a different spot. But for our purposes, you put it in as a business expense. They should reimburse you for your cell phone. And that could be done tax-free as long as the agreement between you is it's primarily for business. Primarily for business. Now, you're not going to track it. So you don't know, did I use 40% business? Did I use 60%, 70%? I don't know. But that doesn't matter. It's just that it's primarily for business. All right. Second, maximize your housing allowance. Had a friend of mine who he always left stuff on the table. And he thought, well, if I'm ever audited and they've got me where I'm gonna have to pay some more tax, well, I've got this to bring out of my pocket and show them this, and maybe I'll save that money. Well, but we don't get audited that often, and so you don't want to do that. You want to do the maximum that you can rightfully justify on your housing allowance. And then the third thing, you want to have benefits, and whatever benefits that you have from the church is advantageous to you tax-wise. For our bivocational pastors, the average salary now is $23,000, and for our bivocational pastors who are in a church serving like 50 to 99 in attendance, the average pay is $33,000. And the bivocational pastors receive $2,000 on average in that smaller category to $2,400 on average in actual benefits. So if they're receiving benefits, we all should be. We all should. David, you had a question?
Yeah, on the accountable reimbursement plan, we have a policy, and I don't know, but we set the policy a while back that any reimbursable business expense over $75 must be accompanied by a receipt. Has the IRS set any threshold like that on the dollar amount that needs documentation?
Well, now, I'm not 100% certain, but I think that you may be bringing in another issue. Here at the State Board of Admissions, if you want to be reimbursed, you've got to have a receipt.
Any amount?
Any amount. If it's $5, you gotta have the receipt.
Okay.
And there is a provision in the IRS language that provides for travel, that if you do business travel, you can set up a per diem, and you would have a daily amount. So people who travel, like for the government, and the per diems vary by what city you're staying in. And so, if you're staying somewhere in Alabama, your per diem would not be as much as if you were going to like New York City. Here lately, I think Prattville, Alabama is one of the most expensive places to stay here lately. But but you can have a per diem, and that about any ticket over 75. I'm not sure if that's acceptable.
Okay.
So I think you should provide
Receipts.
your receipts on everything. If you want to, put that on your card, and
Okay.
I'll look it up and see if there's still any kind of provision for that. So if you did have a per diem, now that's only for travel, that's not for regular daily business expenses. But if you did have a per diem, then you wouldn't be turning in receipts for that. You just receive a per diem. All right, good question. Okay, so these are the ways to save on our taxes. And we need to make sure that these are in place. Now, in your packet, and I told you you're going to get a little exercise today, pulling stuff out. You have the Guidestone Compensation Planning Guide is in your packet. It's that dark green booklet. And we're going to talk a little bit about business expenses. And on page 7, now this booklet, I'll just back up a little bit. The first page tells you about who qualifies as a minister for tax purposes. We've talked about that. The second section, step 1, is a worksheet that you can look at. What kind of expenses do we need and salary do we need and so forth. The third section is what we're talking about. Now, third section, step 2, is on put this all in written form. And then the next section on page 7 is have an accountable reimbursement plan. And that's just a quick run through. Later on, this will be your homework assignment. Later on, you'll want to read this booklet. And if your church is following this booklet in the way that you set up compensation, you'll be doing it well. And it will be to your advantage in many different ways. So let's look at page 7. And this is about an accountable business expense plan. So you, first of all, the expenses, the top set of bullets that are on that page, they tell you what the money can be used for. It can be used for mileage that's in conducting business. It can be used for books and periodicals, things of that nature, software. It can be used for continuing education. It can be used for hospitality, which that means that you could take a prospective family to lunch and you could get reimbursed for that. It means that you could take, say, the chairman of the leadership team or deacons or somebody to lunch to plan out the year, and you could pay for that lunch and get reimbursed. The bottom set of bullets on that page tell you the basic IRS requirements for that. And so it's got to have a business purpose. The expenses have got to be shown in writing, and you've got to turn that report in at least every 60 days. And you can have an advance, but the advance has got to be dealt with within 120 days. And you're going to show how much you spent. If there's any money left over, then you're going to give that back to the church. And then down the bottom of that page, it says any excess expense should not be given to the minister in the form of a bonus. And in fact, on page 8, if you look at page 8, the bottom of the page, there's a little caution triangle there. And it says that these expenses for an accountable reimbursement plan must come from employer funds, not employee funds. So it's got to be done that way. It can't be salary reduction. And years ago, and some churches still doing it that way, that's exactly what they're doing. They're doing it from salary reduction, and you can't do that. If you do it, it's just taxable income. David?
So the way we function as a church is I use my own personal credit card for the expenses of the church. And every month I turn in an expense report, and every one of those line items, every expense is hitting one of the budget line items that we approve as a church every year. Does that classify as a accountable reimbursement plan, since we do have the budgeted line items?
Well, for your, let's say that you buy an item and it's for the youth ministry,
Yes.
Now, they should reimburse you for that. That's not really a business expense. That's just you paid for a budget item and they reimburse you.
Right.
And now that one doesn't fall under these rules.
Okay.
It doesn't. Now, these rules are a good idea to follow, but these are going to apply only to your business expenses. That would be your mileage. So let's say you do go buy something for the youth. So the youth budget's going to reimburse you for that, what you bought, but your business expense line is going to reimburse you for the mileage it took to go get it.
Right.
Yeah.
And so we've got a line item that says staff mileage expense.
Okay.
And so with that,
That's good, but I would broaden it a little bit.
okay.
Just ministry business expense. And
Okay.
it could be for any of these things, not just mileage, but any of these.
Okay. Thank you.
Lee, I'm a little confused on the ARP. Let's say the church is offering me $30,000 as a bivocational pastor.
Okay?
And they say, they won't say this, but if I say to them, make 10,000 of it an accountable reimbursement plan, is that technically using my funds? Or am I just negotiating the number? It seems to me a fine line there.
It is a fine line. That's a great question. And that question was asked of a CPA and a tax attorney that I went to a conference. And we're not supposed to, but then on the others, it's not supposed to come out of your employee funds. But in many cases like this, you're the only employee.
Right.
And they need to be setting these things up at the first. And so I would say, this is not supposed to come from salary reduction, but we need to negotiate all this. And so from now on, y'all put that in the budget, and it becomes your expense, the church's expense, not my salary. And so what that means is, let's say that budget is tight. Let's say I'm not getting a raise, but the mileage rate goes up to 70 cents a mile. They could increase that budget. You know, under the old package approach, I didn't get a raise. Well, I didn't really have any more money to increase my business expenses. So work with them to help them to get this to it's no longer salary. It's a church budget. The church is responsible for it, and so forth.
I can see that, I guess, in the case of limited funds.
Yeah.
It's a give and take. But now you said something else that raised another question. Is the ARP unique for every minister? So if we have a co-pastor situation, which I recently did,
Yeah,
is that a box of money for both?
you can. You can do it either way. You can have an amount for each. You could have a total amount for both. You could have a bigger staff that has multiple ministers, and you could have one line on the budget. And what I would suggest, if you do have one line on the budget and multiple staff, I would suggest have each staff member this is our target for what we want you to spend, or what we think you'll spend on business expenses.
Okay.
And if that, because in that type of situation, you'll have one staff member not spending,
Yeah.
and another staff member who really spends, goes to the nicest restaurant and when they are out of town on business and that sort of thing. So kind of have an allotment type thing. Or if you want to, you could just have a line for each staff member. You could.
Thank you.
That's a good question. All right. So you would reimburse it, and the report needs to be turned in every 60 days at least. So don't do this from salary reduction. And you actually, in the IRS audit technique guide, did you know that they have an IRS audit technique guide for ministers? And it is what an agent would read before they audit you and me. And in that audit technique guide, the agent is supposed to ask questions about your business expenses and about how it's done. And if you, if they said, well, did you do this from salary reduction? and you said, oh yeah, we've got this deal where I've got an X number of dollars, I just do it the way I want to, then they would make that taxable income. So be very, very careful. All right. So commuting is not business expense. Commuting is not. Your trip from home to church is not business. I used to think that if I made a special trip back for a night meeting, I could count that, but no. Your commuting from home to church is commuting no matter how many trips you make. But there is one thing, and we're going to move to this book for a minute. I think we're through with the Guidestone book for now. But in this book, on page 31, I'm often asked, what about trips from home? Page 31. We often have what's called a temporary work location. So your commute from home to church is never business expense. And so we've got this drawing, and this drawing is taken out of an IRS publication, the exact drawing, but we just applied, we put a church picture on it, we put Walmart on it, we put a member's home, we put church type application of it. But this is an exact, other than our application of it, it's an exact replication of an IRS diagram. So your trip from church to home to church, you'll see that's a dotted line. And that means that you cannot count that as business. And you'll see that from church, I could go to Walmart. Now this is to buy stuff for the church. This is not to buy my groceries. And I could go to Walmart and count that mileage. I could go visit somebody, a member's home. I could go to the hospital. I could do all those things, and that would count as business miles. And then what about if I'm going from home to Walmart? Well, you see that there's a black line. I'm not going to go every day to Walmart, and so that's a temporary work location. And let's say that I go from home to Walmart to church, I'm going to Walmart on my way to church, then I could be reimbursed for that full trip because it's a temporary work location. I'm going to visit somebody's home. I can count that from home to the member's home, and then I'll go to the church. I can count all that, or I go to that member's home and back to my home. I can count that mileage because that's a temporary work location. I'm not going to be going to visit that person every week. I'm going to be making a ministry visit, and it's going to be a temporary work location. So you can count from home under those circumstances. And then you've got some other drawings there that'll help you. All right, now this is something that you and I kind of understand because it relates to meals. So the IRS has divided your business expenses into local and then out of town overnight. So your local things, your visits, your hospital visits, your going to Walmart, things like that, they're going to reimburse you for your mileage, for the tolls or parking that you might do. For a meal would not be allowed in that circumstance. I'm just going to Walmart, it's lunchtime, I get lunch, I come back to the church, and are they going to reimburse me for that lunch? No, and they should not. But a meal might be reimbursed under certain circumstances. We'll talk about that one in a minute. But your travel out of town overnight, they can reimburse you obviously for your mileage, for your hotel, for your meals, and so forth. Then you can be reimbursed for all of that. And so that one's called travel. The other part is called transportation, and transportation is what's local. Now, so for meals, I'm often asked this question, what about meals? The staff going to lunch together, that should not be that should not be paid for by the church. It's the IRS, the way they look at it is you've got to eat anyway. And so you could have done staff meeting at the church. You didn't have to go to this restaurant. And so that one should not be. However, a bill may be done to once in a while to celebrate birthdays, celebrate work anniversaries, celebrate wedding anniversaries, celebrate work accomplishments, things like that. And that one can be paid for by the church. So occasionally do that sort of thing. That's a neat thing to do, and team building and things like that. So you can provide a meal under that kind of circumstance, but not under, they're going to go to staff being at the restaurant every week and we're going to pay for that. You would not do that. Now, I'm often asked, is there anything we can do that is not taxable? It's not taxable. And so money is going to be taxable. But there are some things we can do that are not taxable. They're called de minimis. They're so minimal, they're so small, not to worry about it. And this is actually found in IRS publication 15B. I've got it mentioned in just a second, but I think it's 15B. So occasional donuts and coffee and Cokes in the office. You can have a holiday gift of low value. A ham or turkey at holiday times is one example they give. Group term life insurance under $50,000 for the employee, under $2,000 or up to $2,000 for spouse. Occasional tickets to a entertainment or sporting event, and occasional party or picnic for the staff, and so forth. And then here's actually, in IRS speak, here's where the cell phone comes in, because we don't account for it anymore. But to you and me in the business of church, we can think of it as a business expense, and we're going to reimburse for that cell phone, and that would be tax-free. And so what they're saying is that cash or cash equivalents are never too small to not be accounted for. But these are some things that you can do that would not be taxed. And so give a tangible gift. Give a tangible gift, not money. And so the question is, how much? Well, the IRS doesn't say. But I take my cue from what is a ham or turkey worth? Because they did specifically mention those. If we went to the Honey Baked Ham store, what could that be? It might be 60. Would it be more than that? Would it be 70?
Yeah.
So, okay, so if we're talking about sporting event, I think that's kind of a limit. I don't think we're talking about Super Bowl. I'd love to go to the Super Bowl, but that's not what they're talking about. If you get tickets to the Super Bowl, that's taxable. And that's going to be applied to your W-2 if your church pays for it. Yes?
So what about gift cards then?
They really should not do gift cards because, see, gift cards are a cash equivalent.
Okay.
And it really should be, let's say they give you a $100 gift card, they really ought to put that on your W-2. But I know that churches do that, but it's better, if they want to give you a bonus, just write you a check. And that way it goes on your W-2 very easily.
So no more digital currency.
Yeah.
Well, the 1040 has a question anyway about digital currency.
Well, I went to a tax workshop and I didn't go to it, but they had a session on digital currency and the church receiving digital currency as contribution. So that kind of freaks me out a little bit.
Yeah. So let's say you have a visitor that comes to your church and you as the minister decide to take them and their family out for lunch.
Mm-hmm.
Is that considered reimbursable, non-taxable
Yes.
Expense?
Yes, as long as it has a business purpose.
Okay.
So you're taking them to let them know more about the church, answer their questions, find out where they are spiritually, things like that. Or that chairman of deacons or chairman of the leadership team, you're taking them because you're going to do some planning. That you've got a business purpose.
Right.
Let's say that that's your fishing buddy and you go to lunch all the time. No, only when you're You're conducting business. Yeah. Okay, good questions. All right, and that is IRS publication 15B. That's where it's found. And then hospitality must have a business purpose, and it cannot be for, just for fellowship or social in nature. It has to have that business purpose. Your spouse may go with you when that's appropriate, like, all the spouses are going, or say you take a single person to lunch, it would be appropriate for your spouse to go, that type of thing. And then you can do continuing education as a business expense. And there are possible penalties. If they don't do this right, the possible penalty, let's take this example. Let's say that you've got 7 kids and the church has a van, and they say, we don't drive the van much anymore, and let's give it to our pastor. And so they give you the van. And then they don't deal, that van has a value. Let's say it's worth $10,000 at this point. And they've got to either do one of two things. They've got to either put it on your W-2, or they've got to have you pay that $10,000. And if they don't do either, and the IRS asks you, did you receive anything else? And you said, oh yeah, the church is so nice, they gave me a van. They said, well, did they include that on your W-2? No. Did you pay them for it? No. And they can assess penalties for, it's called a automatic excess benefit transaction. That's the terminology for it. And the penalty could be 225% of the amount. So the penalty on that $10,000 van could be $22,500. Could be the penalty. So be very, very careful about things going on your W-2 correctly, and how you do these reimbursements and business expenses. Maybe make sure that you're doing it correctly. If you're not doing it correctly, it needs to be counted as taxable income. All right, now was there a question?
Yeah, I had a quick question. So,
Yeah.
With continuing education, if you're traveling somewhere to do continuing education, could that count as in miles? All right there.
If you're doing it for the church, I think the church can reimburse you for that. Put that on your card, and I will look that up to be sure. Now, the kind of education they can pay for that's not taxable would be working on your master's or above. Okay, but put that on your sheet, and I'll give you a call. All right, let's take a 5-minute break. My cell phone number, and then also our website, allowance.org, and for our church compensation services page, it is allowance.org/CCS. And under administrative resources on that page, you can find the financial issues book we've been working through. You can find the minister estimate of taxes we worked through earlier. And then at guidestone.org, you can find the minister tax guide, which is this booklet, and you can also find the compensation planning guide. Now, if you would like some of these resources in paper copy, you can contact Beth at the State Board of Missions, but these resources are online that anybody can use. All right, we're going to advance further. I don't know how to do this, to skip from one slide to another, so this will work. All right, housing allowance. And in your packet of material, there is a housing question and answer about the minister housing allowance. And for those of you who are online, that's another one from Guidestone. And you can find that there at guidestone.org. It's a question and answer about the minister housing allowance. That's what we're going to go through right now. So housing is an exclusion from income. It's not a deduction. And so that means that the church must set it up. I talked to a financial secretary one time, and I said, how do y'all do housing allowance? And she said, oh, we don't do a thing with that. Our pastor just does it. And I said, well, he doesn't have the authority to do that. Did y'all approve one? No, we didn't. And so it's got to be approved by the church. The church is the one who has the authority to exclude it from income. The minister does not have that authority on his own authority. So it is exclusion from income, like a benefit, things like that. And so it's excluded from federal income tax, state income tax, but it is not excluded from your self-employment tax. And only your church-related income can apply to that housing allowance. So if you're a bivocational pastor and you make $25,000 a year, but your housing allowance really could be 30, well, that you can't ask for 30 when you don't make 30. And so it's only your church income. It can't be from other income sources. Only a religious income. And so if you work at a secular job, no, you can't take money from that and apply it to your housing. And so we've talked about who's eligible: an ordained minister who leads worship and leads the ordinances and so forth. We've talked about the benefits of doing that you have the housing allowance, and you don't have to do withholding. You may, if you wish to, or you may do quarterly estimates of tax. So what are the minister's responsibilities? They're responsible to know that they're eligible. Sometimes I have a question about a licensed minister. What if I'm licensed but not ordained? And what the IRS says about that in that audit technique guide, they say you don't have to be ordained, but if you're not ordained, you must be able to do essentially everything the ordained minister can do. Well, that puts them in a little bit of a gray area, and the taxpayer is the one who's going to ultimately have to be the one to determine that. Understand the rules and the limits, present an estimate to the church, get that approved by the church, and then you are responsible to maintain the records to be ready to prove that housing allowance to the IRS. And if you have any excess housing allowance, you would report that as excess taxable income. So like in my example, the person that made $80,000, they asked for a $20,000 housing allowance, but they only spent $19,000. They would include an extra $1,000 as taxable income and pay the self-employment tax, which will be paid on both your salary and your housing. What's the church's responsibility? They're responsible to approve that, designate that. They should put it in writing. It should be in a written form, either in the minutes of the business meeting, in the church budget, it's listed and that budget's going to be voted on, or it could be a committee, like Finance Committee approves it, and they put it in their minutes of the Finance Committee. And the church should have a vague knowledge of how this works, but ultimately it's going to be the minister's responsibility to prove it. Yes, Dave?
So one thing that I see you said review annually. One thing that we've done happened about 3 years ago. We've got verbiage in our minutes that says housing allowance is X amount this year and all subsequent years thereafter, unless changed.
Yes, that's a very good way to do that.
Okay, so we don't have to review it and approve it every year. As long as it's approved in the budget, we don't have to.
Right. Okay. Doing that language of saying it is approved until changed,
right,
all future years until changed, then you don't have to do it every year.
Okay, thank you.
Now, if you work for the State Board of Admissions, you turn in a housing form every year without fail. And so it's good to review every year. Situations change. One year I might be thinking, I've got to replace the heating and air. I need to ask for a lot more this year. And just the fact of reviewing it, thinking about it, it brings that to my mind to change. Now, I can change it anytime, even during the middle of the year, but it cannot be retroactive.
Right.
So it's only from this point forward.
Right.
All right, then as we go down through here, here's the expenses that are eligible for housing. And in your compensation planning guide, we don't need to open that, but there's a chart there and a form that you can fill out and use that fillable form there to estimate your housing allowance. And so it includes your payment, including your principal and interest and taxes and insurance. It includes the utilities. It includes furnishings. It includes maintenance, upkeep, repairs, homeowners association dues. Any of those things can be included in housing loans. Now, if you're renting, you don't have a mortgage payment or mortgage interest, but you've got the other things.
So does that include like internet? And
Yes, internet to the
and
home.
phone and things like that?
And which,
Home phone?
if you have a local landline phone, that would count. Now, cell phone does not count. And the reason you can't count cell phone as housing is we take it with us. It's not, a utility is affixed to the house. Like if you had power and gas and cable and things like that, those are attached, and your cell phone's not. So a regular phone, landline, old phone, would count, but a cell phone would not.
But you have to have receipts for proof of everything. Like if you take off $25,000 for housing, you have to show that with your mortgage payments, utilities, any expenses and
Yeah.
things like that, for that to equal up to at least $25,000
Right,
and what you pay to eat. Okay.
right. You've got to have that available to you. Now, you don't have to prove it to the church. You don't have to prove it to anybody, but you got to be ready to prove it to the IRS if they should audit you.
Or can they go back?
They can go back, basically they go back 3 years.
3 years?
But if you have, now my CPA daughter, she said, if you materially understate your income, I think that's the word she used. Does that sound right?
That's a good one. Yes, sir.
They can go back up to 6 years.
Okay.
It wasn't an uh-oh, we did it on purpose.
Yeah. And so I think you ought to keep it at least 6 years, that readiness to prove it if you need to. Yeah. All right. So here are the expenses that are eligible as housing allowance. Expenses not eligible, food and domestic help are not eligible for housing allowance. A second home is not eligible for housing allowance. It's where you actually live. So sometimes a minister, let's say they're in a bivocational church, but they've got, and let's say it's out here in Podunk, Alabama, and they live in Birmingham, they've got their house in Birmingham, they're going to keep that house. I think, I'll be at this little church for 5 years, maybe not. I want to keep my home. Well, that home would probably be more beneficial to me tax-wise, but I can't count that one. I've got to count the one that I actually live in. I live in the parsonage for this little church. And so you can only count the one. And you would not count second mortgage unless that second mortgage is for housing purposes, repairs and replacing the roof and things of that nature. Now, I think it's the next page, what is the maximum housing? And is there a dollar limit? No. Is there a percentage limit? No. Many of our bivocational pastors, it can be 100% of their income can be housing allowance. And so what is the maximum? Well, it depends on your situation. So it's the lowest of these three numbers. Number one would be the housing allowance that you requested and got approved by the church. Number two would be how much did you actually spend? And number three would be the fair market rental value furnished plus utilities of that home. So you'd ask a real estate agent, tell me, what would this house rent for? And then they'll give you that figure, and then you say, well, tell me, what would it rent for if it was fully furnished? And they're going to tell you, I don't know, But unless you live down at the beach, and then they would know. But they're going to tell you they don't know. But say, well, just give me a guess. What do you think? And that would be as good of an estimate as anybody can do. So so that's that third value. You need to kind of have that in the back of your mind. So let's say that normally I ask for $30,000 for housing, and this year I've got to replace all my heat and air. This is going to be $8,000 for it. I have no idea how much those things are anymore, but yeah, probably more. But let's say it's going to be 8, and so I want to ask for 38, and I could get 38 approved by the church, and I could spend 38. But let's say that the fair market rental value furnished plus utilities of my home is 33. Well, that becomes the maximum amount. And I wouldn't be able to count 38. I could only count 33 in that example. Okay, does that make sense? That becomes the maximum. And you should think in terms of maximizing this to the best of your ability. So I've known, I had a minister just a few days ago said, well, my payment is this, so that's what they give me as housing allowance. And no, that's not right. You count all these things. It's everything to provide the home. And if not, you're leaving money on the table if you don't maximize it.
So we need to find out the fair rental value of our property to make sure we're going with the lowest.
Yeah, and do find that out if you have a real estate friend that you get them to ask. And they have real estate people who specialize in rental property, so they might have to go to a person like that.
Zillow's another. You can go to Zillow and they'll give you a rental value on Zillow, but it won't give you a furnished.
Yeah.
Okay.
Now, some people get real nerded out on this stuff. I knew of a person that called one of these rental companies, furniture rental companies, and said, what would it cost for me to rent a full house full of furniture? And I think that's too much. I think that kind of invites a problem. But that was what they based it on. One method that I've thought about is there's some apartment complexes that have furnished and unfurnished. And you could see the percentage differential between those two. So is the furnished model 33% more than the unfurnished, or whatever percentage? And maybe that might give you an idea that if my house would rent for, you calculate the month and then you calculate for the year. If it would rent for $25,000, empty, and we've calculated that percentage differential as another third, well, maybe that's appropriate. But I'd be afraid that if you went to a rental store, it might double the amount. It might double that amount that you would be spending, and I don't think that's going to fly. That's just my guess. Who knows? All right. Is it counted for the self-employment tax? Yes. And for self-employment tax, you count both salary and housing. Are bivocational ministers eligible? Just the same way. It works exactly the same way as it does for full-time ministers. Can I deduct my mortgage interest and taxes? Yes. And so on your Schedule A, itemized deductions, you can deduct that. And I don't hear much about it anymore, but it used to be called the double deduction. And this is very, very unusual, we got a double deduction. You could count your mortgage interest and your taxes, property taxes, as housing allowance, then you could count it again as an itemized deduction. And we can still do that if you can itemize. You can still do it if you can itemize. The problem is that a lot of us can't itemize anymore. Is the down payment eligible? Yes. But that limit applies there. So if I put a $50,000 down payment down on this house, am I going to be able to count all that? I'll be able to count some of it. Let's say that in addition to the 50, I want a housing allowance of another 20. I want $70,000 as housing allowance. Well, yeah, you could ask for that and you could spend that, but if your rental value furnished plus utilities is $35,000, then that's as far as you can go.
Can you amortize, like if you make a $50,000 payment, can you amortize it on your housing allowance to say, hey, I want to take 25 of it this year, 25 of it next year? Can you do that?
For housing expenses?
Yes.
No, you can't.
So
Now, there is a way to do that. The only way I know of to do that is to have some kind of home equity loan. Let's say we want to do some major renovation and it's going to cost $50,000, and I know I can't count all that in 1 year.
Mhm.
And you could say, I'm going to pay it off over 3 years or over 5 years, and that would spread it out. And my home equity loan is used exclusively for housing, then that would be one way to do it. There may be another way to do it, but that's kind of the way that works in my mind. Okay, is down payment eligible? Yes. What about a debt-free home? And many ministers say, I'll never pay off my house. I don't want to pay off my house. I'll always have the best housing allowance I can possibly get. Well, Lynette and I, that was a goal for us to pay off our house. And I know that, I know the argument, but that's just something we wanted to, and we feel good about it. And it was nice having it paid for. By the time we retired, that was our goal. So you still have all the other expenses. You've got your property taxes, you've got your insurance, you've got your furnishings that you might buy, you've got repairs and maintenance and remodeling, you've got homeowners association dues, utilities, internet to the home, all those things. And then the other bonus that I learned about since I've been retired is Lynette thinks about all these other things she wants to do to the house. So I'm still spending about the same amount of money on housing as I used to. So I wouldn't fear that as much as about paying it off as much as used to. Now, of course, there's also some ministers have lived in a parsonage for most of their ministry, and they're going to be buying a house for the first time as they retire. And if that's what's going to happen, then you need to be saving extra into your retirement so that you can use that for those payments at that time. When can the churches designate? Anytime during the year. It's best to do it before the first of the year, and they can designate once and say this is for this and all future years until changed, and they can do that. What if the church forgets to do it at all? Then it's zero. And we should have that language. Is there a limit? Not a dollar limit, not a percentage limit. And we've talked about that. In fact, I've got a little time. I'll tell you, there was the reason they can't put a dollar limit to it, and Senator Grassley did want to do that. And he was trying to figure out a way, but the reason they can't, one example, there's a rabbi in Manhattan, and for rabbis, there's different belief, you've got different systems there. But for this rabbi, he could only walk to the synagogue on the Sabbath, and he could not drive to the synagogue. That would not be allowed. And he could only walk a certain number of steps on the Sabbath. So he had to live close. And as you know, that's very, very, very expensive real estate. But we've got a Southern Baptist example. It's not anymore, but it was interesting when I learned about it. Have y'all been to Charleston, South Carolina? The beautiful, beautiful place. And you want to go there. Tourist places, the history, the architecture, all the things. It's beautiful, and the food. Food is wonderful there. They got some of the best food anywhere. That was the very first time that I had shrimp and grits, where the grits were their coarse stone ground grits, and they had cream in them, not just.
Making me hungry.
I'll make y'all hungry. But wonderful place. Anyway, First Baptist Charleston had a parsonage, and it was right along the water, and those houses, they have a Charleston style home. It's narrow, it goes far back, and it's got the porch on the side and things like that. But it's a certain kind of architecture, and through the years they have redone those homes, and they are beautiful. I mean, it's worth it just to go walking down in that area and see those homes. They're beautiful. And now, through the years, and you see some that haven't yet been fixed up, they look like they should be torn down, but they won't be. They'll be fixed up eventually. And they are beautiful, but now they are worth, well, last time I was there, which was 8 years ago, I think it was, they were worth over $1 million each. So I'm sure that's at least doubled by now. And that was one of the parsonages for one of our Baptist churches. And can you imagine? So the pastor in recent years said, it would be better. I feel funny living in this house, and it would be better if we sold the house and y'all give me a housing allowance. And that's what they did. But so that's why there's not really dollar limits on this. It's those three values and the least of those three values. What if the designation exceeds the expenses? Then you've got to declare that difference as taxable. Is it reported on the W-2? Does it have to be? The IRS language. Now, I saw some instructions for a W-2 lately this year, and it said it may be included in box 14. Doesn't say it has to be. And that's the language they've always used. It may be. And if you do, it should be in box 14, labeled housing allowance, not in box 1. What about retired ministers? Can they have a housing allowance? And yes, they can, and they can from their Guidestone Church Retirement Plan. Now, here's that question. I can put money into my Guidestone Church Retirement Plan, saving money on taxes now. Now, I'm not going to pay federal income tax. I'm not going to pay state income tax on the amount that I put in, and I'm not going to pay Social Security taxes on that money. And I can do that. Plus, the church can put money in for me, and it will save money on those taxes. And then one day, when I do retire, ultimately, one day I could take that money out. And for most people, that would be taxable at that time. But as a minister, I can take it as an ordained minister. I can take that, even though I'm not serving a church anymore, I can take that out as a tax-free housing allowance. So that's the best retirement thing you could do. I put it in saving money on taxes. I take it out tax-free. And that's why you'd want your first money that you have for retirement going into the church retirement plan through Guidestone. They do a good job with their money too. So does that kind of answer that question? Yeah. And my suggestion would be that's where you start, is the church retirement plan through Guidestone.
Lee,
Yes.
Guidestone does something that I find interesting. I use it. I can roll IRAs into the 403B and back out for self-directed investments. So here's the example. This is my case. And I challenged them on it, but they said, no, we're in good standing. Roll the money out and I buy real estate with it. Sell the real estate, cash, and the cash goes back. So the IRA is on the real estate. I've not found a reason that would be a problem, and Guidestone says, send the money. Have you ever seen a problem with that? Or?
No, and I don't know how to really comment on that, but one thing that Guidestone will tell you, it's your responsibility.
It's our responsibility.
Yeah. And
That's what the IRS said about everything I've ever asked a question on.
Yeah.
And I haven't found a reason that I should.
So are you putting the money back in within that period of time that,
It's not a distribution.
Oh.
I'll take money from the Guidestone account, roll it to an IRA,
oh,
and equity trust, and do a real estate purchase and sale.
wow,
So the capital gains goes back to the 403B at Guidestone.
wow. That's amazing.
It doesn't work for rental properties because you lose so much, but if
Yeah.
you're just buying, flipping properties, it works well.
Wow, that's amazing. So the retired minister can have housing allowance through Guidestone because they have the authority to grant you housing allowance. You can't do that through Merrill Lynch or Fidelity or any of those.
So essentially, the IRA is treated as housing allowance when I'll distribute it years from now.
And
I feel
Guidestone,
guilty about it, but I think I'll work through it.
I mean, they're going to basically say your responsibility is to prove that to the IRS and how that it's used for housing loans.
Yes, sir.
Yeah, that's about all I know.
Okay. I won't hold you to it.
Okay.
It's commingled money. That's like I say, I'm going to counseling to get past it.
All right. Now, do ministers pay self-employment tax? Not retired ministers. No, not if they're fully retired.
What does that mean, fully retired?
Well, that's the $1 million question. Then what does it mean? And so, Guidestone says that you're supposed to be retired. If I'm serving a bivocational church, or like me, I'm working part-time here, then I should take my housing from my church or here. I mean, here. And then if, let's say that I'm not doing that, but I'm just supply preaching or taking a short interim once in a while or things like that, well, maybe I am retired at that point. But the IRS has never really defined what retired means. So if you're serving like bivocational church every Sunday and that sort of thing, I would think that you take your housing allowance from that church, and you're really not retired.
So how do you, just from practicality standpoint, what if the IRS sees it one way and you see it a different way? What's the recourse for that?
Well, if you're audited and the IRS sees it one way and you see it another, I mean, there is tax court. Now, there's a process for an appeal, and then ultimately it goes to tax court. But if you read the audit technique guide for ministers, tax court wins a lot. I mean, the IRS wins a lot in tax court. So I want to be cautious. I want to be cautious. Does the surviving spouse receive housing allowance? No. No. And the one exception that we've got to that in Southern Baptist life is if the husband and wife have both been IMB missionaries, because they're both commissioned and they both qualify for housing. It's not quite what it used to be, and the reason that it's not quite what it used to be is it's the doubled standard deduction, having a $30,000 standard deduction. Most of us can't itemize anymore, and most of us don't get that double deduction. When I was first in full-time ministry, my first church, I made $12,000 a year. The second church, I made $15,000 a year. And out of that, I had housing and that sort of thing. And even with those salaries, I could itemize deductions. Just can't do that anymore. It's just not for most of us. Now, I'm sure that there are some ministers in larger churches and they make more money and stuff like that, and they could itemize, but most of us can't. So it's not quite what it used to be, and this will kind of show you. And what I've said on this slide is, often I get a question, should we ordain our youth minister? Well, only if that youth minister feels called to ministry to be ordained. I mean, you know, a lot of youth ministers don't. So don't do it just for the tax. Don't do it just for tax. And here's why. Let's take a non-ordained youth minister, married, makes $45,000. And less $30,000 standard deduction for that married couple. And federal tax on $15,000 is going to be $1,500. And his portion of FICA, his portion of it will be $3,442. So grand total tax will be $4,942. But let's say he's ordained and he wants a $15,000 housing allowance out of that $45,000, and less $30,000 for standard deduction. He owes no federal tax, none. But his SE tax is going to be $63.58. So his grand total tax is at $63.58 as opposed to $49.42. So what I'm saying is, a lot of ministers don't come out all that great. And the housing allowance is great, but they have to pay that self-employment tax. So don't do ordination just for tax reasons. If you have a young youth minister in your church or somebody like that, do it about their sense of calling, not tax. Here's an example of what your W-2 should look like. And this is in your book on page 26 in the financial issues book. This is a sample. This is what your W-2 looks like. This is a pastor of a church that he made $25,000. Out of the $25,000, he wanted $15,000 to go into housing allowance, and he requested that, and church approved it. And so that makes that his salary was $10,000. But then he also wanted to put $2,000 into his retirement. And in addition to that, the church put $1,000 into his retirement. And so that gets the taxable portion down to $8,000. And so that goes in line 1 of the W-2. And the other $2,000 that he put into his retirement, that goes in line 12. Line 12 with code letter E. Now, he received some life insurance in excess of $50,000. There was a little taxable amount. It amounted to $12, and so that's recorded there in box 12 and also added to box 1. Now, Alabama state wages are the same as federal wages. Same housing allowance works the same way. The retirement savings works the same way. And so $8,000 goes into his state wages. And notice that box 3, 4, 5, and 6 are always blank on an ordained minister. 3, 4, 5, and 6 are always blank. If you have an amount in box 3 and 5, the IRS is going to send you a bill, send the church a bill for that FICA tax that the church didn't pay. Any questions about what a W-2 should look like? Okay, everybody okay? All right, what about a home office? And we used to say, well, for decades, the IRS has said, you're already, excluding your whole home, so you can't count home office because it's already been excluded from income. And they said if you want to count home office, then you've got to take that part out. Maybe you're getting housing allowance on 90% of your house instead of 100% of your house. But anyway, it's become simple. Recently, the Tax Cuts and Job Act eliminated any employee cannot take the home office deduction. Anybody who's an employee anywhere. Now, this is not just church, this is anywhere. I think it's interesting, all this happened during COVID. And, millions of people were working from home. And so they said, no more, can't count home office.
Quick question. So if you're bivocational, you have a secular job and you're working for the church, and the majority of the time you're working for the church is at home.
Okay,
Could you take a home office then, or since you have working a secular job and you can't, you're an employee there, so.
well, you should, from your church, you should get a W-2. Do you get a W-2?
Well, I'm not bivocational, I'm just saying theoretically.
Okay, yeah. Even that bivocational pastor should get a W-2. Now, sometimes the church is mistaken and they'll give a 1099, but should give a W-2. And when that W-2 is provided, that person can no longer count home office. Yeah. All right, so maximize the benefits. We talked about have an accountable reimbursement plan for your business expenses. We talked about maximize the home, your home deduction, not deduction, but your housing allowance. And now we want to talk about maximizing benefits. So we're going to go back to this book, page 21. Page 21. Does anybody have a group healthcare plan?
I do. I'm a
Yeah.
retired teacher.
Okay. All right, good. Does your church do anything health plan wise? Okay.
Yeah.
Okay.
My wife is.
And y'all got it
retired
because of
teacher.
that reason.
Yeah.
You know, these days, the medical insurance has become terrific. And I mean by that, terrific. It's just so expensive. A lot of churches can't do it. And I wanted to mention this because this is something your church could do. We have all kinds of ministers who have who have wives who work a full-time job just to get the insurance. We've got a whole bunch of full-time ministers who drive a school bus to get the insurance. And so a lot fewer churches are actually providing insurance these days. Now, when you get to a church of attendance over 150, you begin to see it. When you get to 250 in attendance, it's pretty common. When you get to like 450 in attendance, then it's very common. But even some of those churches running 450, they're struggling with the idea of health insurance. And these days, I've seen people, especially like 62, 3, 4-year-olds that are not yet qualified for Medicare. I've seen them go and looking for insurance and seen them see some prices like, $28,000 for the two of them. And so it's just really terrible. So I put this in your book. If we have some kind of medical benefit, how is that treated for tax purposes? And so if you have a group healthcare plan from your church, that would be tax-free to the employees. If you have Guidestone, that would be tax-free because it's considered group. If you have individual insurance, then generally, you skip down this chart, generally taxable. But there's a couple of new things. Excuse me. And when the Affordable Care Act came out by 2015, it was just kind of basically, if you have a group health care plan, that's tax-free, it's a benefit. If you have individual, it's not. And in 2015, it's pretty much that simple. But they've got a couple of HRAs since then, and you'll see them in this bottom right square. You can have a health reimbursement, and a health reimbursement might be in conjunction with your group health care plan. And so, like, say if you have a $5,000 deductible, the church could give you a health reimbursement of, say, $3,000, $4,000, $5,000 that they're willing to do if you spend that much, and they're willing to reimburse it back to you. And by doing so, the church still saves money because they're not going to reimburse that amount to everybody. It's just those who need it. But this bottom right square, there's two new HRAs. One is called a Qualified Small Employer HRA. This is where everybody gets their own insurance, and the the church you give the church a copy of your bill. The church has to treat everybody alike who works 30 hours a week or more, and they can reimburse that individual health insurance up to a certain amount. And the reimbursements don't exceed $6,150 for individual or $12,450 for a family. And so here's a church that cannot provide health care plan, but they can do something. And they can decide how much they can do. And this reimbursement could be tax-free. It's got to be written. It's got to be following the rules. It's got to be available to anybody who works 30 hours a week or more. On page 68. Page 68, you've got a little bit more information about this, about a qualified small employer HRA. Now, beyond what I just said, I just told you everything I know. So if you want to do this, you're going to need some help. And you're going to need a benefits company or a health HR manager type company to help you to set it up. Now, once you get it set up, you can administer that yourself because it's not that complicated. There's another one called the individual coverage HRA, and it's got a little bit more flexibility to it than the qualified small employer HRA. But I can't really tell you when. I do have one example of when the IC HRA was effective. This was a church that had a group plan, and then they had a minister who was 65 and getting Medicare, and so they paid for the Medicare supplement for him, and they wrote a little plan like this individual coverage HRA to provide for that. But you can find some basic information online, but you really need some help, somebody who's an expert who could write your plan. Now let's go to page 22, same book, page 22. Is it taxable? And as we go down through here, of course, salary is taxable, love offerings, bonus, gift cards, severance, those kind of things that are taxable income. Social Security offset. What we mean by that is the church says to you as an ordained minister, they say, well, you really are an employee, and for other employees that we have here at the church, we would be paying half of their Social Security and Medicare tax, called FICA. And we can't do that on you. So we can't do it, so we'll give you the money. And that'll help you towards your FICA. And oftentimes the church will give an additional 7.65%. And it becomes just regular taxable income. And it does help, but it's just regular income.
Is it subject to SE tax?
Yes, it's subject to federal and state and SE. Mm-hmm. Yeah, but it can be done. It's just taxable. Payment of personal expenses are taxable. Forgiveness of debt is taxable. Like, let's say that the church loaned you $20,000 towards the down payment when you came to that church, and they said, we'll forgive $5,000 each year. So if you stay here at least 4 years, you'll get it all forgiven. And so as they forgive that debt, it is taxable. Club dues like country club, YMCA, some kind of sports or things like that, those things would be taxable if the church provides it. But a professional organization dues would not be taxable. And then the housing allowance, it is not taxable for federal, not taxable for state, but it is taxable for the SE tax. Reimbursements, we've talked about those reimbursements, and as long as they do your business expenses properly, it's not taxable, it doesn't go on the W-2. You just turn in the proper documentation, church reimbursed it, no tax involved. And there's also, they could reimburse you for your cell Tuition can be done. There's a couple ways. Paying for a bachelor's degree ends up being taxable unless it's for a tuition assistance plan that's for all the employees. You know, we're gonna make it, all full-time employees could get this tuition assistance plan. And if you do that, you gotta have a written plan. But for those in seminary working on the master's or doctorate, you can reimburse for those expenses and it would not be taxable. Moving expenses are taxable, we talked about that. Benefits would not be taxable, except there are a couple of them that have, like the life insurance, if it's over $50,000, it might have a small taxable amount. Retirement, if the church contributes to your retirement plan, that is not taxable. Okay? Other benefits, they could set up if you've got a real young staff, a lot of kids involved in families, they could set up a dependent care assistance plan. And they could pay, gotta have a written plan. And again, it's gotta be fair to all employees, all full-time, and you could do that. You could set up an adoption assistance plan. And we had one church that they were so committed to adoption that they did it. They did set up such a plan. And that's true. All right. Let me mention this, cash in lieu of benefits. This idea of the package. We did that long ago. Churches still do it. You're not supposed to do it. Because if the church says to me, here's $80,000, do with it whatever you want to. Well, basically, I could ask them to approve a housing allowance. And I could put money into my retirement because I can do that. And those two things would help me on my taxes. But other than that, everything else is taxable. And it's called cash in lieu of benefits. Also, let's say that you've got, you're providing health insurance and you've got a group plan. And you got a new employee, and your new employee says to you, I don't want your health insurance, I've got it through my wife, and I don't want it. And so, I don't want it. And you say, okay, sign this form, so you've rejected the health insurance. And then I say, what do I say? Can I have the money instead? And if you're in a church doing it correctly, or you're here at State Board of Missions, you know what the answer is? No, you can't have that money. And it's called cash in lieu of benefits. And the idea is that if one employee could do it, all of them could. And if all of them could, then it's really not a benefit, it's really just salary. And so therefore it's taxable. So a benefit really needs to be a benefit. It needs to be a benefit. Now, one more thing I want us to do. Tax time is a good time to think about retirement savings. Do you have enough term life insurance? Do you have disability insurance? And do you have a will? And make sure you've got those kind of things in place. Now, there's one more thing that I want us to do today. And I'm going to have a little bit of fun with it, but I'm also serious. We need to think about long-term tax planning. And so there's a sheet that you have on your desk, and it's called To Roth or Not to Roth. Now, by the way, y'all asked me about tax brackets. The 0% tax bracket is up to $30,000. That's the standard deduction. Then the 10% is the next $23,000. The 12% goes up to $96,000 in addition to the 30, and so it goes pretty far up there. And then the 22% tax bracket, is up to 206, plus like your house allowance. Probably don't have very many ministers who go beyond. There is a 30. What's the highest bracket? 37. or something like that. I don't even worry about what that is, because that's not our world. All right, now, one more I want us to do is this to Roth or not to Roth? And let me find that. Do y'all need a break? Are y'all okay? Everybody okay? Because this one doesn't take a long time. All right. So first, a disclaimer. I'm not a financial planner. I'm not a CPA. I'm not all those things. But this is just for general information, and that's what it's for. You can get some guidance at Guidestone. They do have financial planners. You can receive some individual specific not tax advice, but retirement planning advice. All right, so first of all, what is the Roth? And the Roth was developed in 1989, I think it was, and Senator Bob Packwood of Oregon and Senator William Roth of Delaware brought this up. So the traditional way for retirement is you put the retirement in, saving taxes now, and then one day, when I take that out, when I do retire, I'm going to pay the taxes on it then. And so it helps me with my taxes now. The Roth is just the opposite of that. I'm going to pay the taxes now, and then I won't pay the taxes when I retire and when I take that money out. And so the Roth is a really neat thing. And for most Americans, well, really not most, there's a lot of Americans the Roth would not help. But for a lot of Americans, it's a good idea. We're going to talk about that. When is it a good idea and when is it not? And so for people who are not ministers and people who are good savers, the Roth is kind of a no-brainer. It's a good thing to do. But for us in our situation, it may not be the best answer. So why do a Roth? Because my retirement savings, I am going to put in a certain amount, and then 30, 40, 50 years from now, I'm going to retire. And that money, the main money in that account is not what I put in. It's the growth. So the really neat thing about the Roth is that I'm paying the taxes on what I put in, but I won't pay the taxes on what I put in, and I won't pay the taxes on how it grows. So that's a really, really great thing. And to accumulate $100,000 by age 65, what would I need to put away per month? Now, I'm going to tell you, $100,000 is not enough. Not these days, not anywhere near. And I've seen people retire, and that was their retirement was $100,000, but it's really not enough. I've seen people retire with no retirement, and they lived off Social Security, but that's certainly not near enough. Excuse me. But let's say that I want to get to 100,000, and I just use that because it's an easy multiplier. If I'm age 30, I only need $44 a month. Wow, that's not very much money. But if I wait till age 40 to start, I need 105. If I wait till age 50, I need $290 a month just to get to 100,000. And this is assuming an 8% return on your money. So you can't have that in the bank. You can't have that in a money market. You'd never get there. So you've got to have it invested, reasonably invested, and what this chart is based on is making 8%. And so the point of this chart is start early. And most of us in this room are like, well, I should have. But that's the point of this chart. But let's see what happens if we add a 0 to it. And so if I'm age 30 and I did $440 a month, or let's just say I did $500 a month. Now, and I started at age 30. The average family, now let's talk about family income. in Alabama is over $60,000 a year. And so let's just round this off to 500. You know, if you had a $60,000 income and monthly, that would be $5,000 a month. 10% of that would be $500. I'm putting in 10%. So I'm not a rich family, and I'm not, you know, it might be better if I put in closer to 15%. So I'm not setting the woods on fire on my retirement savings. But if I put away, let's call it $500 a month from age 30 to age 65, then when I got there, I would have $1 million. Now, most of us don't end up with $1 million, but a lot of us should be thinking more that way, because $1 million in terms of your retirement is not it's not a lot in terms of what you think it is. And so, but notice the neat thing about the money. This person was putting in $500 a month, essentially. So they put in $6,000 a year. They put in $6,000, let's just call it 30 years. So 30 years times $6,000 would be $180,000. Did I do my math fairly right there? I always try to do some math in my head so that I keep that ability to do it a little bit. But $180,000, and it grew to $1 million. They put in less than 20% of that money. That is the neat thing about retirement savings and having all those years for it to grow. And that's one of the things that, concerning a Roth, that'd be great, that I'm only paying taxes on $180,000, and again, I've used rounded numbers, but $180,000 rather than on the full $1 million. So that's neat. So why do the Roth? I'm going to pay the taxes now. Maybe my taxes are really low. Remember our example of the minister that made $80,000 and he had $20,000 housing allowance, $30,000 standard deduction, and so forth, and then they had a child under age 17. He was paying, I think we ended up at $1,600 in federal tax that he paid. So I could do the Roth, and I'm still not paying a whole lot more in taxes. So when my taxes are low like that, that's a good time to do the Roth. And now again, I'm going to talk about a specific thing about ministers in a minute. So I'm not really suggesting that ministers do that from the beginning. So that's a good reason to. The Roth, it's all about the growth. That's going to help me on my taxes, and it's a better way to pass money on to your children. The Roth is than the standard, because this regular kind of retirement plan, your kids, when we're both gone and they receive that money as an inheritance, they've got to spend it in 10 years. And they've got to pay the taxes on it every year they receive it. So the Roth would be better for them because they wouldn't have to do that. So why do a Roth? Here's some reasons. What could go wrong with the Roth? Now, the number one thing that could go wrong with a Roth is the person is not a very good saver. Not a very good saver. So, in fact, I heard from somebody the other day said, I've got $16,000 in a Roth. And when you added up all they had in retirement, it wasn't very much. And so when I get to retirement age 65, and let's say I'm married, we're going to have our $30,000 deduction, standard deduction, plus I'm going to have an additional deduction for being over age 65. And this year, that amount is $1,600 for each of us. So instead of making 30 tax-free, I can make 33,200 tax-free as being over 65. Then my Social Security, as we said before, it might not be taxed at all. and it might be taxed, if I make a little bit more, it might be taxed at 50%. And so if my total income coming in my retirement is somewhere in that range, $35,000, I'm really not gonna pay any taxes. So if I did the Roth all these years and I'm not gonna pay any taxes, I've just wasted that money. So if I'm not a great saver, don't do the Roth. Now, if you listen to talk radio, financial talk radio, and I'm a fan of Dave Ramsey, I'm a fan of Clark Howard, and their every answer is the Roth IRA. But if you're not a good, and of course, I know Dave Ramsey has a plan. If you really follow that plan, you will do well financially. But if you only halfway do it, you're not going to do so well. And if you're a poor saver, then there's no need to do the Roth because you're not going to pay really hardly any taxes anyway. Now, also, what could go wrong with the Roth? What about concerning ministers? What about concerning ministers? Well, my planning should be that I will put my money in traditionally until I'm well on my way towards having housing allowance covered. Now, I can't guess, what is housing allowance going to be like in terms of amount 30 years from now? I don't know. Lots and lots of houses in middle class incomes in Alabama are $400,000 these days, and it just blows my mind. So what will that be like in 30 years? I don't know, but I'm just going to kind of make the point, and then you've got to be the one to decide what's best for you. So let's say that I'm thinking of I'll need a $20,000 housing allowance per year. And that's what I think I'll need. Now, I'm just making that number up. You might think, well, by then it needs to be 30. But let's just take 20. In order to generate 20 in my retirement years, there's basically two ways to receive your money. One way, you control the account, and we've got a retirement workshop this summer that we'll go into more depth on that. But one way, you control the account, your money, you draw out from it. If you make as much as you draw out, then you always have that amount of money. You've eventually got that amount of money you can pass along to your kids. And that's one way. Doing it that way, the conservative number on what should I take out each year is 4% of the account per year. So if I have an account of $100,000, I ought to take out $4,000. That's not very much. And if I wanted $20,000 a year, basically I would need 4 times 5, I'd need 500,000 to take out 20,000. I'm using that 4% rule. Now that's very conservative. Very conservative. You might be in a situation where you take a little more than 4, 4.5 or something like that. But that's one way to do it. And so I could plan on, in that scenario, now again, I'm making this up as an example, but in that example, I would need 500,000 put in traditionally into the Guidestone retirement plan before I thought about the Roth. Now, there's another way to pull your money out called a simple life annuity, and you can get more per month. So I'd get more than that $333 a month per 100,000. And that would be, I would need less money to do that. So and I'm just making this up. You can go into your retirement plan that you've got at Guidestone. You can log on, you can check it out, and you can do some calculations of what it might generate one day when you do retire, based on how much are you contributing, how much it is growing, and when you would retire, how many years off are we? And so you can do those kinds of estimates. But But, so I would, and let's just throw out an example. And again, I'm using very broad guesstimate terms. Don't hold me accountable for, but let's say I needed $500,000 to generate 20,000, the 4% rule. Maybe this other way, I need 400,000 to generate that much. And so, so I should be, as a minister, as an ordained minister, I should be putting in my first dollars always into Guidestone Church Retirement Plan. And now Guidestone does have the Roth. If you want to contribute to the Roth, it's great, you can. But if you're an ordained minister, I would wait until I'm well on my way to, let's say that I'm back here at this, let's see, go back. Let's say I'm on this track, I'm headed towards $1 million. And again, I know that blows my mind too, that's a lot of money, and it is. But if I'm headed that way, then obviously you can see that I'm not going to need all that for housing loans. But if you're on track to hit 400,000, 500,000, that needs to be on track for housing loans. And you'd want to put it into the Guidestone Church Retirement Plan. You would not want to put it into an IRA because you can't do housing allowance from an IRA. You would not want to do Merrill Lynch. You would not want to do these other companies. Guidestone has the authority to grant you housing allowance someday when you do retire. Does that make sense? Okay. All right. Oh, what taxes am I going to pay when I retire? Well, so as I contribute. So for ordained ministers, as I put the money in traditionally, I'm not going to pay any of those taxes. But if I'm not a minister, I would pay taxes on the FICA. I would pay taxes on that. Now, if I'm putting money into the Roth and I'm an ordained minister, I pay taxes on all three, including the self-employment tax. So I'm going to pay my federal, my state, and my self-employment tax. And Guidestone once told me the cheapest way to do a Roth for an ordained minister, the cheapest way to do it would be put it in traditionally, and then later on down the road when you've kind of done some of your financial goals, then you could convert that money. And that would be cheaper because I'm not going to pay self-employment tax on it at that point of conversion. So that's the difference in taxes. It's a considerable difference in taxes. If you're in the 12% tax bracket and doing the traditional, then that money, you've got 12% and 15%, and Alabama income tax. It's based on 5%, but for a lot of people, it works out to be about 3 to 4% because of all the generous deductions that Alabama has. And so, I'd be doing 12 plus 15 is 27 plus 3, about 30% in taxes. And if I'm doing traditional, I'm saving 30% of what is going in. There's another argument for the Roth. Let's say that I'm putting $5,000 into traditional, and I'm putting $5,000, or I have the choice of putting $5,000 into the Roth. Well, the other argument for it is you're actually saving more money because of taxes. But that's talking about a regular person, not us, because we've got that opportunity for housing allowance in our retirement years. Okay. If I'm over 50, are there any reasons to do a Roth? Yes. One reason, now once you're well on, we're talking about ministers, you're well on your way to providing for your housing allowance. So now we're talking about over and above housing allowance. Are there any reasons to do a Roth? Yes. Over 50. Yes, because at 50, well, this is something I never do. When I was in my late 30s and early 40s, I was looking at my retirement thinking, dreaming about retiring early. Well, here I am. I'm age 71. I'm still working. And I'm still not using my Guidestone retirement yet. And so who knew that? Who knew I'd be working this long? But see, if I'm 50 and I'm thinking about that, but I work till 70, see that money still has plenty of time to grow. And also this opportunity to pass along to my kids tax-free, that's a very good reason to do the Roth. And then also my taxes may be low. Now, again, for an ordained minister, cheapest way to do it is convert it later on. Okay, can I convert my money to a Roth? Yes. And you would want to do that only when you've accomplished other financial goals, like paying off the house, stuff like that. And then the bottom line is, and here's the bottom line, that your church should provide the Roth. And for your non-minister employees, the Roth is a great thing. All right, what questions do you have? I hope I haven't lost you. I know I went into a lot of scenarios with that. Everybody okay? Do we have any other questions online? No? Everybody all right?
So there is an additional tax benefit for being over 65?
Yes. There's an additional tax benefit for being over 65.
Something to look forward to.
Yeah. It helps. It does. All right, let's have a word of prayer. I'm going to dismiss us, but I'll be hanging around a little bit. If you got any questions, I'll be glad to help. Let's pray. Father, thank you for today. Thank you for a good day. Thank you for everybody who's here and everybody who's online. And we just thank you for those who are desirous of being really good stewards of all that you've entrusted to us. And help us to understand these complicated matters and to apply them to our lives in a way that will be beneficial. And thank you for everyone who's come. In Jesus' name, amen. All right, thank you all for being here.
Thanks, Lee.